Hi, folks. This is Lee with the Market Sense for the week of October 13th, 2020. The charts in this presentation come to us from the Trade Navigator software. And our weekly bond market chart shows no signs of breaking out of the sideways, and honestly, I don't expect them to anytime soon. This market has been no fun since back here in March when we had these massive move, and I don't see any way they'll break out of this before the election, and quite honestly, I don't see why they'll break out after the election, regardless of what happens. The economy is what it is, and the Fed is going to continue to keep interest rates low as long as they can to try and stimulate it. And I'm really not sure what it would take to break this out, but maybe they can start swinging a little more within the sideways to give us something to deal with. But as you can see, a little mini breakdown last week, possible chance to buy support of 173 this week, but no, they just turned right back up. The resistance to continue the trend down is around 174.27, and they appear to be working their way back up through that, so I don't think that's a factor. The next target up here is around 175.24, and if they can get through that, maybe 176.26. And you can see those areas are barely a point apart. It's just because the volatility has been so low because everybody knows they're not going anywhere, really. That'll change. I'm just not sure what it's going to take to change it. Now, in stocks, we have kind of an interesting situation here. September is historically the weakest month for stocks, and these 4 weeks here certainly did their job of making that true this year. October isn't very good either, and yet October is looking pretty good so far. The one caveat that you got to watch for here is we had resistance up here this week right around 35.27, and they got up above that, and now they appear to be turning back down and getting rejected from it. Now, if they don't close back above that, and if they really do struggle and stay below it, that could indicate a bit of a problem here. We were looking for the strongest support to be in the 33.98 area, just below 3,400 here at the upper moving average, and you can see they just haven't come anywhere near that. It'll take a lot of weakness just to get them back down there. So, I mean, they look good, but the fact that they've sort of hit that resistance and backed off is not good. So you got to look to see, like I say, if they can close back above that this week. If not, that will be somewhat of a sign of weakness. I'm not terribly worried about the weakness, though, and that's because this is the QQQ. Now, the various stock indices do not have to go together. They absolutely can do opposite things, but they don't make any major moves unless they kind of all agree. And as you can see, this market has not hit its resistance and turned back down. In fact, it gapped above it Monday and then has just kind of stayed there. That resistance, by the way, is around 289.58. And really, there's not anything until they reach the old high here above 303. Now, they could run out of gas anyway. There doesn't have to be resistance, but unless they turn and go back below this 289.58 area, they look pretty good, and it wouldn't surprise me if they wind up pulling both the S&P and the Dow with them. As in the S&P, we had support here around 280.58 that was the strongest support we were anticipating to drive them higher. And at this point, they've gapped so far up and kept going that it'd take a tremendous amount of resistance to get, or tremendous amount of weakness, I mean, to get it back down there. And in fact, if we get that, I would no longer consider this support. I wouldn't be interested in buying them if they fall that far this week. So that's what we've got for you today. I hope you can find something profitable